There we go. Chill.
But
Oh, shit.
typically in Asia, you don't want to trade a lot of the USD pairs because there's always a possibility of a pullback happening going into the USD session. So like EU, GU, all the majors they move in contingent with each other. So I just closed my GU trade. I closed it like market close. Even though it kept running a little bit more, I just closed it to be safe. Um, but typically I want to see this pull back a little bit more. So like EU, let me go to EU. You see my screen? Typically, I want to see something like this. I want to see a retest at the high, come back into the range, and then do something like that. Because you gotta understand what uh so you so yeah, overall the overall move has happened. And you gotta understand, like from the psychological standpoint, when they move markets, it's money moving. So when they move it in a certain direction, they're not just gonna hand money out and let the move just go forever. So they gotta take some of them profits back. So at the end of the day, there's always buyers and sellers in the market. So when prices get super high, they're selling. So they're selling back in the range to take some of them profits back. So this particular range, look how it lined up with price action. And it's crazy. I didn't even see this at first, but look how it just lines up perfectly. Then that's a 618 range. That's a 50% range. There's a high possibility. There's a high possibility that price is going to retest this area before doing a continuation. And it already did three pushes. So the market moves in threes. Look, one, two, then three at the high. Then look, you got a divergence. Look, you see the divergence. So it's a possibility that it's going to do a continue. It's definitely going to do a continuation up, but I think it's going to shake people out before doing that and retest. You always want to get in. You always want to get in after a retest and a consolidation and a retest. If you don't see that consolidation, and that's one thing that I really been trying to practice more is waiting for the consolidation to happen because in context, the consolidation is them collecting contracts. So when we're trading the contract for difference in the price, right? So when they do those consolidation moves, they're collecting contracts. So look at it like you shooting a bow and arrow. The contracts is you just accumulating strength for the price to move in a certain direction. So I want to wait. I want to wait for that to happen before. Like don't get me wrong. Like it might shoot up, but I think it's gonna pull back because it's so early. But the only oh no. The only thing that lets me know it is a continuation is the daily time frame. Like if you look at the daily time frame, price action is going straight up. So there's a higher probability of price continuing in that direction versus if price was moving sideways, like you say, you don't know if it's a reversal or continuation. But that's why using the higher time frames is a guidance tool for understanding when you're gonna have a continuation or a reversal. What's good, Wigs? How you feeling? Nigga crazy. Yeah. All right, let me send this out to a few more people. Join up. This is not times. What's good with you, son? Deep bad boys. Come on, man. Hey, man, y'all wish my boy Triz a happy birthday, man. His birthday tomorrow. That boy about to be 34. Oh, wait, how old you about to be? 37? Old that nigga. So somebody check it out. Face ass. Let me send it to Rod. Let me see. Join up, brother. Send it to Xavier. We get a picture here too. Yo, come on, Wigs. Come on, Wigs. That's how you coming, bro. Oh man. Hey, he got a point. He got a point, Triz. He got a point. He got a point, bro. Oh, oh man. Dang, bro. You be going busy with the right hand, bro. Oh, wait, and pedestrians, bro. Stop playing with him, bro. Hey, that's not good though. You need to stop it. Yeah, man. Yes, sir. Nah, this shit look nice. It look nice though. Yes. So that's where understanding the candlesticks. That's what understanding the candlesticks and all that come into play. So first of all, like the move I took on GU today, it's the same exact move. Uh, so first of all, you got all of this. You got all of this, right? So looking at it, so that's why always starting out on your highest time frame is coming to play. And I know it's kind of repetitive, but bro, it's rinse and repeat. So just looking at this, the monthly, you got strong momentum to the upside. You in a strong uptrend. Boom. Okay. That's actually the weekly. Go down to the daily, where that consolidation has started. It's the same thing. You got three pushes to the downside. One, two, three, consolidation on this EMA. Then you got a confirmation. Then you got a candlestick formation. Then this is where the understanding of the price action come into play. So the struct um actually, bro, that's like very important, bro. Because the threes, why? The three is important because three is a psychological number, bro. You got to understand we're up against banks, we're up against governments, we're up against corporations. You know, they hire the best psychologists to manipulate people and take their money. So three, right? If you see something one time, you're probably not gonna bite. If you see something two times, you're gonna follow, and then the third time they're gonna trick you. So the market moves in threes. Like no matter what direction you go in, no matter if it's trending, no matter if it's counter trending, it's gonna move in threes. So like right here, I'm gonna show you. I'm gonna show you a whole cycle. Like one, two, three, one, two, three. Then like this whole thing, and you also got three within three. So you got one, two, three, one, two, three, two. This actually just started the second push. So, like I say, I think it's gonna keep going, but I do think it's gonna be some type of retracement going into New York. But it's still early. But the good thing is this move has already started. So that's where like it's a matter of being a little scientific and applying a little bit of geometry come into play. Um, so like this move is happening on a larger scale. So I know there's gonna be some type of continuation. It's just understanding the micro movements within the continuation. And that's where, you know, understanding the timing of the moves come into play. But what keeps you from getting bad timing is utilizing the 4 hour time frame and utilizing the candlestick formation. So like this particular consolidation that we had talked about, this move confirmed once this candlestick formation happened. What candle formation is this? It's like it's a bullish engulfing. But in context, right? I know y'all use like fair value and gaps and all that type stuff, but in context, it's all the same thing. This is just a W at the low. So look, that same candlestick formation is just this. Let me make this a different color. Damn, bro, I miss teaching, bro. I always say that. Like every time I get on the call. Nah, nah, bro, don't do that. I feel it, bro. I feel it, bro. I feel it. See, Peasky, what's up, my brother? But look, this that same candlestick formation. Look, and your entry signal, depending on what time frame you're on. Damn, I got you. I got you. Let me just use this eclipse tool. This right here. Yeah, exactly. So yeah, exactly. So that's where understanding like this is a micro structure, but that's where understanding like the breaker structures come into play, and then also too just understanding like the way I look at the market in three phases, right? You're either gonna get an inducement, you're either gonna get a trap, or you're gonna shift. So after the trap, which is the consolidation, which is the confirmation of the candlestick formation, that's where the shift candle come into play. So you got a shift candle right here, and then you got like a micro, like a mini pullback. You can enter right here, and then look, it's all profit. It's all profit from there. So yeah, that's how you keep yourself from getting stopped out of the moves. Hey, CP, that was something you said you needed help right with, right? Just understanding like how to get into the moves at the proper timing. But yeah, that comes from utilizing price action on the higher time frames and then waiting for your closes. Like like we all want to practice good habits. So a good habit is waiting for the opening of a candle and the closing of a candle because you got to understand like price action is basically showing you the footprint of the dealer. It's telling you a story of what's going on with price. So if 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 you get a close over these candles, that's letting you know, like, okay, the money is shifting in this direction. Now I'm safe to take this entry.